Hi traders, it's Mike with FXBattleground.com. Let's take a second and look at this pound US dollar situation on Friday, Friday after Thanksgiving. Early in the week, we had a breakdown from this area you'll see up here. This is an upward trend line that we had been watching as of the weekly update, and we said that a breakdown below this trend line would end up being probably a down move for the pound. So we were watching that pretty carefully, and there was a breakdown, a close, and a little retracement, and then a big breakdown in this area. Here in this area, you'll see that there is earlier in the week, there's a video that we called to watch that area and take a trade within that area. That was our area of focus, especially as a result of this battleground area that exists from on the higher time frame on the daily chart. You can find that. So that was a trade that was very successful, and if you got in that trade and held, then you held all through this consolidation, were never really challenged, and here you got your bigger payoff for your patience. Let's move up to the daily and just take a look. Here's the upward trend line that we talked about. You can see it moves up this way, and now that we've broken it, we had a decisive down move. And additionally, you can see that we were oversold in these areas, or overbought in these areas, and when we start moving down, there's a lot of, that's what we say, we've got gas in the tank. This is a good place to try to find your way in a logical way, not just because this is overbought, because markets can say overbought for weeks. It's just a sign that if there's a breakdown below a key area, then that's a good risk reward because there's a lot of downside. All right, let's move back to the 1 hour and look at how we could have entered this trade. This is the 1 hour, and you can see here's the breakdown here and here. Okay, this was the breakdown below the trend line. This breakdown here, and this is where we're looking. This is the area that we talked about earlier in the week to try to get short, and we got short right in this candle. The stop held into this battleground, and we took profits down in this area, and then we held some and ended up sort of taking it out before the holidays, just because we didn't want to be in the market, so we were out. So we're watching, and what we're seeing is this sort of squeeze effect, what we like to call kind of a pot boiling over, or in this case a pot boiling under. You got pressure coming down from the top, and it's building and building and building, and while this lid is trying to hold it, eventually the pressure becomes too much, and when it breaks, it's usually a pretty heavy down move. So in this case, you can see why we teach you to not take the break below this area, because anyone could have seen this line here and said, oh, well, I'm going to take the break. Well, there's a couple things, not too great about this entry. And first of all, is you get the worst price that you can possibly get. It's a terrible price, and your stop's going to have to be big, so your risk reward becomes more difficult to deal with. And you've never proven to yourself that this price is going to trade below here. It's traded down here a few times, but there hasn't been considerable trading going on down in this area, so you don't know for sure if it's going to actually want to be down here. What we tell you to do is, let's wait. Let's let it break down. We're not going to miss the move. Let's be patient. We're not going to miss the move. We're going to make it close twice below this line. So if you look, let's move to the 15-minute chart. Here's the break below. Now you got all these closes down below now. And if you'll pay attention, you'll notice that very often when price breaks down in this way, that it will always return to the 20 MA. And you can see how this trend line also is kind of pushing it down. That's the trend line that we noted earlier. The 20 MA is still sloping down. We're still heading down. And there's no real attempt to have an igniting bar that comes out of here. So we're not impressed by the bulls at this point. And when we do see this breakdown, and one close below, two closes below, we're not going to try to short the low of this candle either, because that's a terrible price. We're going to say, hey, I think it's going to retest the 20. We're going to wait for the retest of the 20. It's going to retest this breakdown area, this support that now is going to become resistance. And as it comes back up, we're very interested. Right in this area, we're very, very interested. So it works its way back up into the 20, and then we're anticipating it's going to move back down exactly like we want. So what we can say is, let's use this green bar as a metric. Let's use this green bar as a measurement. We got one bar up, we got two bars up, and now we're gonna, this bar closes right here. It's touched the 20, and we'll say, hey, you can either short the low of this bar now, or the low of this bar. And while this still is about the same price, you say, well, it's the same price as breaking this low before, right? Well, yeah, but you know what? Now we've tested and been back up in this area, and not only that, now the market is proving to us it doesn't want to be here. We could have shorted this low on some kind of little down break, but then the market could have said, hey, let's just get back right up in this area again. But the market had a chance to digest this area. All these, and here again the psychology of the market enters. There's a lot of longs in this area. They all got long. They thought, this has to be the bottom. This has to be the bottom. It's been a down move. I'm going to catch the bottom. This is an amateur way to trade. They're trying to catch the bottom. They're holding, they're wishing. They really said a prayer right here on this tail. Oh, I think this is it. And that got rejected. And now they're just sitting in front of their monitors, and their knees are shaking, and they don't know what to do. And when this breaks down, they're very scared. Their account balance is negative. They don't want to be here anymore. And when you see this run back up, this is the last chance for them to get out with any dignity, because they know if it rolls and this bar erases and it heads down here, they're going to get crushed. So that's when you have this overwhelming selling pressure that comes in here. Nobody in their right mind is getting long on this bar, a new long. Nobody's taking out a new long position in this area. This buying is only from people who did buy this breakdown of here, who do play that strategy for scalp, and they're going to do this, and they're going to take their profits. So you get this short temporary little rally back, and then the selling pressure overwhelms again, and this is where we like to be in. So we get in for the price of this bar, which is very small for the pound, and you can see it's already a 2-hour trade. You got the size here of this bar, and then the size of the payoff. So you could either enter on the low of this bar, or more conservative, and in this case, not much worse of an entry, is at the close of this bar. So whatever your plan says, this is not a recommendation to trade. This is only education, and whatever you decide is for you. Then that's the way you can play this trade. But this is a high odds trade. The only downside to this trade is that we've been down a little bit here. We've been down a few we've been down a few bars on the hourly and the 4 hours. So but we did have this consolidation period. So this hard fall over the course of a couple of days this week, early in the week, this is a pretty big fall, a few hundred pips. So then but having this consolidation is, takes all this shock out. The shock is gone. People have had a chance to deal with this and decide how they want to play from here on out. But you can see how this downward pressure sort of gave you the clue of what direction the market is going to go. But the key is not to jump the gun. Don't try to get in here and try to trade this consolidating range. It is contracting, and it does look like it's going to go in a certain direction. But don't be the one that buys the fakey break. Don't be the one that tries to go long here. This is obviously a downtrend in every time frame. And I don't think the retail investor is really playing long on the daily here. And I don't think a retail investor is playing long on the weekly. Perhaps institutions would do this, but you guys are looking for hourly entries. You're looking for 4-hour entries. You're looking for the short term. As long as you're not running into brick walls on the higher time frames, this is the current direction of the market. So this was a great setup. It just consolidated out beautifully. It never really faked us out. It did a nice little breakdown, closed below, put in the doji, and then was bought back up into the perfect area. Almost to the pip, right into the little triangle that we want it to be in. You can see this. You're bound on one side by the 20, the trend line. You have this battleground line that we teach here, and you just barely got up in there. I mean, it just doesn't get any clearer than this. So congratulations to anyone who took it. This is a great trade, and you're in. And again, the great thing is that you're in a great area. I mean, you may not be in for very much longer, but if this area breaks, I mean, you could be down for a lot of days. So, especially the daily is just coming off of being overbought. So there could be a lot of moves down, and if you hold without trailing too tight, or if you hold all or nothing trade management, you could be holding this for a few hundred pips. So this is a time when your daily is just coming off overbought and you're short. It's a time to be aggressive with the way you're going to hold this play, because this could be a trend change on the daily. It could be 1,000 pips by the end of December. So good time to hold, good time to test the market, and good time to try to clean up a little bit. If you're in for free, what do you have to lose? Trail it down on 4-hour pivots and make some money. This is Mike with FXBattleground.com.